Have you ever caught yourself thinking it's too late to start investing? Perhaps you believe the investment world belongs exclusively to 20-somethings with decades ahead of them? I'm here with an important message. You haven't missed your chance, not even close. Whether you're 50, 60, or beyond, this guide will show you how even modest sums like $100 can grow into a meaningful safety net, starting today. The statistics might surprise you. 1 in 3 Americans over 50 have less than $10,000 saved for retirement, according to the Federal Reserve survey. But numbers don't tell the whole story. Let's address the elephant in the room, the myths that might be holding you back. Myth 1. Investing after 50 isn't worth it. This couldn't be further from the truth. Consider this simple math. Investing just $100 monthly for 15 years at a conservative 6% return can grow to over $29,000. Compare that to keeping the same amount in a standard savings account, where inflation actually erodes your purchasing power year after year. A Roth IRA with proper allocations can transform what seems like too little, too late into meaningful financial security. Myth 2. It's too risky for my age. Risk is manageable, even after 50. You don't need to gamble on cryptocurrency or chase the latest market frenzy. Treasury inflation-protected securities provide government-backed protection against inflation. Certificates of deposit offer predictable, guaranteed returns. Quality dividend stocks from established companies can deliver both growth and income. The key is diversification. By spreading your investments across different assets, you create a balanced portfolio that can weather market volatility while still generating returns appropriate for your life stage. Remember, caution is wise, but excessive fear can be costly. Now that we've cleared those misconceptions, let's get practical. Here's your step-by-step roadmap to begin investing today, regardless of your experience level. Step 1. Define your goal. Before putting a single dollar to work, clarify what you're trying to achieve. Your goal shapes your strategy. If protecting your savings from inflation keeps you up at night, Treasury inflation-protected securities, or I bonds, are designed specifically for this purpose, automatically adjusting with inflation rates. If generating reliable income is your priority, consider dividend ETFs like Schwab's U.S. Dividend Equity ETF or Real Estate Investment Trusts, REITs, which distribute regular payments from their earnings. Write down your specific goal. This clarity becomes your compass when markets fluctuate. Step 2. Where to invest your first $100 for beginners, focusing on the U.S. market. These 3 options offer solid foundations. 1. Treasury bonds. Provide exceptional safety, backed by the U.S. government. Visit treasury.gov to purchase with no middleman fees. Even small denominations are available. 2. Index funds like Vanguard's S&P 500 ETF, VOO, instantly diversify your investment across America's 500 largest companies. One purchase gives you ownership in companies like Apple, Microsoft, and Johnson & Johnson. 3. High-yield savings accounts from online banks like Ali offer APYs exceeding 4%, significantly outperforming traditional bank savings rates while maintaining FDIC insurance. Stick to what's simple and regulated. Complexity often hides unnecessary fees and risks. Step 3. Automate to stay consistent. The secret to successful investing isn't timing, it's consistency. Apps like Acorns can round up your everyday purchases to the nearest dollar, investing the spare change automatically. Fidelity's Auto Invest feature can transfer a set amount from your checking account on payday before you're tempted to spend it. Remember, small, regular contributions often outperform sporadic, larger ones. To see these principles in action, consider John's journey. At 62, after decades of believing investing was for financial types, John finally took action. He started modestly, just $100 monthly split between Vanguard's S&P 500 ETF, VO, and Treasury bonds. Was he skeptical? Absolutely. But John remained consistent, even during market fluctuations that initially made him nervous. 8 years later, his disciplined approach transformed that modest $100 monthly contribution into a portfolio worth over $15,000. The compound interest calculator doesn't lie. Time still works in your favor, even with a shorter horizon. As John often says now, I wish I'd started earlier, but I'm grateful I didn't wait another day. Time is still on your side when you start now. Not decades of time, perhaps, but enough to make a meaningful difference. As you prepare to start your investment journey, let's address two questions that might be circling in your mind. Question 1. What if I need the money soon? Liquidity matters, especially later in life. Treasury bills, particularly 4-week T-bills, can be liquidated quickly with minimal penalties. REITs, while excellent income generators, often have redemption periods around 90 days. Match your investments to your timeline. Keep emergency funds in accessible accounts while allowing longer-term money to grow. Question 2. How to avoid scams? Unfortunately, scammers often target older investors. Watch for these red flags. 1. Promised returns exceeding 8% annually. 2. Brokers not registered with regulatory authorities. Verify credentials at SEC's investor.gov. 3. Anyone creating urgency with Act Now pressure. Walk away immediately. Protection starts with skepticism toward anything that sounds too good to be true. Your next decade can be financially brighter than you imagine. What you do today, not yesterday, determines your future security. Take that first step. Invest $100 this month, even if it's just in a CD or basic index fund. The hardest part is starting. Hit that subscribe button and give this video a thumbs up if you found it helpful. It really supports the channel. Remember, you're not alone on this journey. Comment, I'm starting below, and join thousands of others building wealth after 50, because it truly isn't too late to begin. See you in the next video.